Imagine being 19 years old, alone in a small dorm room, staring at a blinking screen while the world outside celebrates its weekends and parties. Everyone else is following the herd, trusting that markets will rise, believing the story they've been told. But you see something different, a crack in the system, a hidden path where risk meets opportunity, where a single insight can change everything. You make a choice to sit on the sidelines like everyone else, or to step into the chaos and bet against the tide. Tonight, I'm going to take you inside the trades that transformed a young, unknown trader into a figure the markets couldn't ignore. We're not talking theory, we're talking the real decisions, the raw pressure, the moments when millions were at stake and every second mattered. You're about to see how preparation, calculation, and a willingness to act when others freeze can turn a dorm room experiment into extraordinary opportunity, and why the edge isn't in luck, but in thinking differently, faster, and smarter than everyone else. Hold on, because by the end of this, you won't just understand the trade. You'll feel the tension, the stakes, the heartbeat of the market itself. Every second, every tick, every decision mattered. And those who mastered it didn't just profit, they became a force, shaping markets and rewriting the rules of possibility. At 19, most people are figuring out how to balance classes, social life, and a part-time job. I was doing something different. I was staring at a tiny computer screen in a dorm room, running programs and analyzing every tick of the market I could get my hands on. I didn't have a fancy trading floor or a team of analysts. I had ingenuity, persistence, and the kind of obsession that makes most people uncomfortable. Every morning I'd wake up, not to the sound of an alarm, but to the idea that if I could get faster access to information than anyone else, if I could see patterns before anyone else, I could create an edge. I rigged a system that most would call overkill, a fax machine to receive market data, a telephone for instant calls, and even a makeshift rooftop satellite dish. Every tool, every mechanism, every shortcut I could devise, I used, because I understood a simple truth early: opportunity favors preparation and speed. I was building a bridge between technology and trading before most people even imagined it. The dorm walls weren't a limitation. They were a laboratory. They were where I could test ideas at a scale and speed that a conventional office couldn't offer. What I learned in that room wasn't just about markets. It was about thinking differently, questioning the obvious, and embracing discomfort. Everyone else looked at trading as buying low and selling high, following the headlines or reacting to price movements. I looked at trading as a puzzle, a complex system of signals and anomalies. The market wasn't a place to gamble. It was a place to understand, to analyze, to anticipate. And the earlier you start, the more time you have to compound both knowledge and execution. Some nights were grueling. The line between work and life blurred. The world outside went to parties, had fun, and I stayed glued to screens, debugging programs, testing hypotheses, learning the rhythms of the market. But those nights built something intangible: discipline, focus, and the ability to trust your own judgment under uncertainty. I wasn't following someone else's playbook. I was writing my own. And there's another truth: confidence comes from preparation. When I finally started executing trades, it wasn't bravado. It was data-driven conviction. I knew the market's inefficiencies, its quirks, and its tendencies in ways few others did. Every dollar risked had a reason. Every position taken had a logic grounded in numbers, speed, and foresight. That dorm room taught me the most valuable lesson in finance: edge is created, not inherited, and it starts with the relentless pursuit of knowledge. By the time I left that dorm, I wasn't just a student, I was a practitioner. I had transformed curiosity into skill, risk into understanding, and early beginnings into a foundation that would define every decision thereafter. The markets are vast, chaotic, and unforgiving. But the right preparation, the right mindset, and the willingness to operate differently than everyone else can turn even the smallest dorm room into a launch pad for extraordinary opportunity. Markets have a way of humbling the overconfident and rewarding the prepared. In 1987, the world was moving under the assumption that stocks only went up. Everyone was optimistic, and almost no one was willing to consider that prices could fall sharply. That's exactly the moment where opportunity appears, not in what everyone sees, but in what everyone ignores. I recognized a gap between perception and reality. I saw the risks accumulating, the imbalances quietly building under the surface. Most people shrugged it off, trusting momentum and sentiment, but I knew that a market can turn faster than anyone expects. And when it does, the consequences can be extreme. I positioned myself carefully, deliberately, and with a level of conviction that comes only from deep analysis. This wasn't about gut instinct. It was about reading signals, understanding the flow of capital, and predicting where others would be forced to react first. I took positions that, if wrong, could have been catastrophic. The stakes were enormous. But that's the reality of trading at the edge. You're not rewarded for caution, you're rewarded for insight and conviction. When the market collapsed in October, everything changed instantly. Positions that others had dismissed or ignored became critical. Those who were unprepared suffered devastating losses, while those who had positioned themselves to anticipate the shift captured outsized gains. I didn't just benefit financially. The trade itself became a proof point of a method, a discipline, and a mindset. It was a moment that separated noise from clarity, panic from calculation. And while luck plays a role in any single event, consistent results come from understanding patterns, managing risk, and executing decisively when the moment demands it. What struck me most about that period wasn't the profit, it was the lesson in human behavior. When fear hits, rationality disappears. Markets are social systems as much as financial systems. Understanding psychology is as critical as understanding numbers. Those who react first with preparation gain the advantage. Those who follow the crowd, hoping it will hold, are often left behind. This trade underscored that principle more vividly than anything before or since. Looking back, the defining element wasn't simply taking the right position. It was seeing the invisible currents beneath the surface and having the courage to act when conventional wisdom was firmly on the other side. The experience taught me the value of positioning before the obvious becomes obvious, of using research to build conviction rather than following trends, and of understanding that risk is not something to avoid, but something to manage strategically. That trade didn't just generate capital, it validated an approach, a philosophy, and a way of thinking. T proved that being young, unconventional, and relentless in preparation can turn what others see as chaos into opportunity. Markets will always surprise, but if you can read them, anticipate the moves that others cannot, and act decisively, you don't just survive, you thrive. And that is how early experience in volatility shapes a mindset capable of navigating the markets at the highest level. Markets are full of complexity, and complexity is where opportunity hides. In the early days, I gravitated toward areas that others overlooked, niches where information asymmetry and mispricing created edges. One of the most fertile grounds was convertible bonds, securities that blur the line between debt and equity. On the surface, they seem straightforward, a bond with an option to convert into stock. But in reality, they are an intricate puzzle. The value of the bond is influenced not only by interest rates, but also by the price and volatility of the underlying stock. Most investors saw only the headline yield or the market sentiment around the equity. They ignored the subtle pricing inefficiencies. That's where I focused. I approached convertible bond arbitrage like a scientist approaching an experiment. Every bond had a story: the company's fundamentals, the behavior of its stock, the embedded option pricing, the impact of interest rate movements. I built models, tested assumptions, and calculated every risk and payoff. The goal was simple: exploit small inefficiencies across bonds and the equities into which they could convert. The challenge was immense. The calculations were complex, the trades often illiquid, and the market moves could be violent. Mistakes weren't just costly, they were punishing. But the opportunity, when approached rigorously, was enormous. Success in this strategy isn't about intuition alone. It's about discipline, structure, and risk management. You can identify mispricing, but if you don't manage leverage, hedging, and liquidity, you'll be destroyed before you ever capture the value. Every trade required a precise balance, hedging the equity exposure without neutralizing the arbitrage, adjusting positions as volatility shifted, and continuously monitoring the behavior of counterparties and the broader market. It was meticulous work, demanding both quantitative skill and mental endurance. Early on, executing these trades in the dorm room environment forced me to innovate. I had to automate processes, track dozens of positions simultaneously, and react to price shifts faster than most professionals could. That taught a critical lesson: technology and speed amplify insight. The smartest idea is worthless if you can't act on it efficiently. And the smaller inefficiencies, the ones too subtle for conventional investors, were often the most profitable over time. Convertible bond arbitrage also taught a deeper principle about markets. Every inefficiency is temporary. Once discovered, it attracts attention and capital, and the edge diminishes. Success requires relentless innovation, constant adaptation, and a refusal to be satisfied with yesterday's methods. The arbitrage wasn't just about money, it was about training the mind to see patterns others overlooked, to quantify uncertainty, and to act decisively in the face of complexity. That early mastery laid the foundation for everything that followed. It wasn't the glamour of trading headlines or riding trends. It was the quiet, methodical, high-conviction work that compounded over time. Understanding convertible bonds taught more than finance. It taught patience, precision, and the mindset necessary to succeed in markets where risk and reward are never equal, and only preparation determines who thrives. Talent alone doesn't create opportunity. Insight without capital is a thought experiment. In the early stages, I had both the curiosity and the skill, but real growth required someone willing to place trust and money behind those abilities. The first breakthrough came when a seasoned investor, observing consistent results from unconventional strategies, decided to entrust me with a substantial allocation of capital. That moment was pivotal. It wasn't just about money, it was about validation. It was the first signal that disciplined research, careful risk-taking, and methodical execution could translate into real influence in the financial world. Receiving that capital wasn't a guarantee of success, it was an amplifier. Every decision now carried weight, and every misstep was magnified. But it also offered scale. Positions that were once theoretical became actionable. Trades that were small experiments could now move markets and create meaningful impact. The key was not just to preserve the capital, but to deploy it strategically, extracting maximum return while managing risk meticulously. I treated that trust as sacred, understanding that performance would determine future opportunity more than any single trade ever could. The experience taught a fundamental principle about mentorship and capital. Opportunity often comes from those willing to take a calculated risk on someone who demonstrates capability and conviction. But that opportunity must be met with preparation. You can't rely solely on the generosity of others. You must validate it with results. In my case, that meant translating early success into a structured, repeatable approach, demonstrating not just flashes of brilliance, but consistency. Every position taken, every hedge applied, every decision executed had to reinforce confidence, not diminish it. The impact of that capital went beyond financial returns. It accelerated learning. With resources to test hypotheses at scale, I could refine strategies, observe outcomes across diverse conditions, and build models that would form the backbone of future operations. Mistakes were still costly, but with controlled risk, they became lessons rather than disasters. The combination of mentorship, capital, and personal responsibility forced rapid growth. It's one thing to know a strategy works in theory. It's another to execute it when the stakes are real, when money is on the line, and when the pressure is constant. That early experience also shaped my understanding of human behavior in markets. Capital attracts attention. It brings scrutiny. It demands accountability. And it reveals character. By managing entrusted funds successfully, I learned how to navigate relationships, communicate conviction, and build credibility. Skills just as critical as quantitative analysis. Ultimately, turning a track record into opportunity isn't just about performance. It's about preparation meeting trust at the right moment. It's about recognizing that when someone believes in your ability and stakes resources behind you, it's an invitation to elevate your approach, refine your execution, and expand your impact. That moment, when skill, discipline, and trust converge, becomes the launchpad from which real influence and growth emerge, shaping a trajectory that mere talent or ambition alone could never achieve. Early success in trading is exhilarating, but it is only the beginning. Making the leap from executing individual trades to building an institution requires a completely different mindset. At first, it's just you, your analysis, and your positions. But once you start managing significant capital, the challenge shifts from individual brilliance to systematizing excellence, building teams, and creating structures that can scale without compromising discipline or edge. The transition is not easy. It demands vision, resilience, and an understanding that markets reward consistency over flash. When I decided to take that step, I realized that building an institution was not about recreating what others had done. It was about constructing a framework where research, technology, and human talent worked in unison. Every decision, from hiring the right analyst to designing trading systems, had to be informed by rigorous logic and the relentless pursuit of efficiency. There was no room for ego or shortcuts. Every function, every process, every rule needed to support a culture of precision and accountability. That foundation allowed the institution to operate in markets around the world, adapting to volatility and seizing opportunities that others overlooked. The first challenge was scaling. Early trades relied on insight and agility, but managing larger pools of capital introduced complexity that could no longer be handled by instinct alone. It demanded quantitative models, automation, and a disciplined approach to risk management. I spent countless hours refining systems, stress testing strategies, and developing protocols that could withstand extreme market conditions. Every innovation was designed to preserve capital, amplify insight, and reduce errors. Because when you manage other people's money, mistakes are magnified and credibility is fragile. Another crucial lesson was the importance of culture. The people you surround yourself with define the limits of what is possible. Talent alone is not enough. You need individuals who share a relentless work ethic, intellectual curiosity, and commitment to excellence. I invested in people as much as in systems, because the right team allows ideas to flourish, errors to be caught early, and strategies to be executed with discipline at scale. Without the right culture, even the best strategies will fail. The final piece was vision, a clear idea of what the institution could become and the principles it would never compromise. Markets change constantly, but a strong foundation allows you to adapt without losing focus. Growth was not just measured in assets under management, but in the ability to consistently deliver results, manage risk, and innovate. Each success reinforced the importance of preparation, research, and conviction, while each setback reminded me that humility and adaptation are equally critical. In the end, the journey from a young trader to founding an institution is defined not by a single trade or moment, but by a commitment to excellence, disciplined execution, and relentless improvement. It's about turning early insights and small victories into systems and structures capable of sustaining success over decades. It's about taking the lessons learned in a dorm room, the defining trades, and the trusted capital, and amplifying them through vision, technology, and man talent. That is how individual skill becomes enduring influence, and how early ambition transforms into an institution that shapes markets and stands the test of time. So here's the truth most people never see. The market doesn't reward hope, it doesn't reward hesitation, and it certainly doesn't reward following the crowd. It rewards preparation, courage, and conviction. The trades we just explored weren't luck. They were the product of relentless study, tireless focus, and the willingness to act when everyone else was frozen in fear. Now imagine yourself at the edge of that same moment, the moment where everyone else is unsure, the market is volatile, and the opportunity is fleeting. Will you stand on the sidelines watching the world move past you, or will you take the calculated risk, trust your insight, and step into the chaos where fortunes are made? Because that's the moment that separates the spectators from the players, the casual investors from the legends. Remember this, edge is never given. It's earned through discipline, speed, and the refusal to accept conventional wisdom. And once you seize it, it compounds. One bold decision executed with clarity can change the trajectory of everything. That's the power of seeing what others overlook, of acting when others hesitate, and of trusting in preparation when the stakes are at their highest. So go forward with one thought in your mind. The market will always move. It will always test you, and it will always challenge the bold. But if you combine insight with courage, research with execution, and risk with discipline, you don't just trade, you dominate. You don't just survive, you thrive. And when that moment comes, when the next opportunity strikes and everyone else is waiting for permission, you'll be ready. Step into the chaos, make the move that others won't, and write your own legend.